Last week, we talked about how one would actually do the globe information return or prepare for it if you are in-house. And of course, a few days afterwards, the OECD came and they published the final, I assume, document on how the return will look. So let us look at that and see what has changed. Now, first of all, if we look at changes from the draft to the final paper, one, we were right in saying that there's going to be a universal XML schema. The new text mentions it several times. It is not done yet. The OECD held a tax talk yesterday in which you could submit questions. We have submitted questions asking when this file will be ready and whether they will produce a XML example so we can see not only the XSD schema but also how the XML file should look, for instance, how the namespace at the top of a XML file should look. And we suggested that the OECD themselves maybe make an Excel file with a VBA macro attached so that the Excel file can convert to the required qualifying XML schema so that third parties do not earn a lot of money on something that is essentially basic IT compliance. We've not heard any response to that, but maybe we will still get some, and if we do, I will put it underneath this video. The second thing is that we were right about saying that the general information will be compulsory to be filing during the transitional period, even if there are transitional safe harbors. And thirdly, obviously, we were right about saying that, you know, when you file for entities, you do need to always fill in the entity and jurisdiction information besides the transitional safe harbors. And if you do have entities where you don't qualify for the safe harbor, you need to fill in all the data points. And in connection, especially with the transitional safe harbors, the OECD added some additional new data points in return. So let's look at those and see what they are. If we look at the previous chapter division, you can see you had the general information where you very hybridly talked about who's filing, etc., etc. Then you talked about the corporate structure, mentioning all the individual entities and the jurisdictions that they are in, etc. Then you came to the ETR and the top-up tax computation, and finally you did the top-up tax allocation and attribution. Right. So under the new chapter division, there's only 3 chapters: the M&E group information, which basically is a combination of the general information and the corporate structure. Then you talk about the jurisdictional safe harbors and exclusions, and a lot in this chapter is new. We'll have a look at it in a moment. And then the globe computations is basically a combination of the ETR top-up computation and the top-up tax allocation and attribution. The one thing that was added to the general section in the new document is this high-level summary of the globe information. I like it. I think a lot of this information is already calculated elsewhere, so there's no need to recalculate, but it will definitely give a very good overview of the globe information return on a jurisdictional basis. And here you can see the different topics that one would have to fill in, and you would obviously have the countries down the rows here, and then you would have all the other details across the column. So if you are in 100 countries, you would expect 100 rows in your Excel data file. And below, as we did before, we put the schema at the top, and then we put all the commentaries as to what you need to fill in where below. In the actual globe information return guidance, these things are split, meaning that you have to flip back and forth all the time. This makes it a lot easier to deal with. Now, if we look at the changes in the information return structure, as I said, the safe harbors is one of the big changes. So in the previous division, there was only the 2 points on safe harbors and nothing said really about transitional safe harbors besides mentioning it in the beginning. Now you can see in the new chapter division there's jurisdictional safe harbors and exclusions, the characteristics of the jurisdiction. This is very much a repeat. They have it in two different places, just saying, you know, what the jurisdiction is, the name, etc., etc. I can't even remember whether you need to name the constituent entities, but maybe you do. And then you come to jurisdictional exceptions applicable in respect of this jurisdiction, right? So you talk about your safe harbor jurisdiction election, and you talk about your permanent safe harbors and your transitional ones, right? And for transitional safe harbors, you talk about your CBCR safe harbor, you talk about the UTPR safe harbor, and then there's an election for de minimis exclusion as well. There is also this calculation for simplified non-material constituent entities. I'm not quite sure whether that was in the previous return or not, but it features far more prominently now under the permanent safe harbors for the safe harbor jurisdictions, right? And then in both cases there is the data to be filled in for M&E groups for startups cross border, where you get some additional relief if you are in a startup phase. Then if we look at the computations, they very much remain the same. They may be moved around a little bit, but if you look at the old and the new chapter divisions, in the old one you start with your jurisdictional computations, you do the ETR and the top-up tax and your deferred tax accountants, and you say what your elections are. In the new return, we now only talk about GLOW computations. There's not a separate chapter division in that regard anymore. Again, as I just said, you describe the characteristics of jurisdiction, which I assume would be pretty much copy-paste of the previous one, and one wonders why you then need it twice. You do your ETR computation, where you do your ETR just like you do in 331 and the old one, but it is as though there's a bigger split between the ETR and the top-up tax computation, right? And in both cases you go down to after the jurisdictional computations, you also go down to the constituent entity computations, which you do on the 324 in the new chapter division. You can see there's a 343 in the old chapter division. Also, the new one contains the international shipping and the other accounting standards. These are also under 324. And then you do your top-up tax computation and allocation, which is, as I said, more clearly separated under the new chapter divisions than the old one. I assume that part of the reason why the new chapters are subdivided like this is that if you are only in the safe harbors, the transitional safe harbors, you would probably not have to fill in anything in chapter 3 of the return. You only would have to stick to chapter 1 and 2. But if you have any entity which is not qualifying for the safe harbor exemptions, then you probably need to do the whole of chapter 3 for that entity and the jurisdiction that it is in. And then just a final note on the commentaries. There have been some commentaries added. There have been some additional boxes added in some of the returns, even though they were the same between the draft and the final one. But all in all, you know, considering the fact that that you've got this whole long section on transitional safe harbors, the commentaries, as you can see, have gone from 34 pages to 40 pages. That's I don't know, a little bit less than a 20% increase. It's not too much. So I assume that most of the new commentaries would cover the transitional safe harbors and the additional data requests around that. That's all I have for you. I again invite you, if you have any comments or suggestions or other ideas about how you're going to prepare the Globe Information Return in your organization, please feel free to reach out. I think it'll be wonderful to share information and experience here, especially if the OECD is not going to help us by making a tool that we can simply export data from Excel into their approved XML schema. Bye for now, and case law it will be next week.